All right, so this is just a quick uh, trend review. So you had the market. It rallied over here, and obviously there's heavy volume over there. There. And that's the area that held. And then continue, but this was a little bit too early in the morning. So, can't really do anything about that, right? Because you don't have I don't have all the data that early in the morning. So over here, well, after the session starts, you have a big wave up and the lack of supply, and that's it, right? It's simple as that. There's no rocket science to this. Where's my, and 1 second. So here, big wave, here, lack of supply takes out the high. Once that happens, it's it, that's all. You got, it's giving you high confirmation along with lack of supply, all of that good stuff. So I'm looking over here. I see that there's a lack of supply, and then there's a rally, and this right here, this volume right here, this is, I mean, it's not that much, but it's the biggest in I think about 21 bricks. So chances are it's going to hold, right? Because they've spent all this energy, not energy but money, reversing the market right here and buying to reverse the market. Okay, and all this area has been tested. You see, it goes up, test, and all of that. So this is very likely to hold. So it gives you a very nice spot, tags in and flies. That's it. There's no rocket science. I see the opportunity. I see that there's no supply. I see rally, and I see an area where there's high volume and there are buyers there reversing the market. So it gives a good probability of holding. That area should hold and gets tapped into and rallies. And also very important is the time of day, because that means there are buyers there. I mean, technical analysis, one of the key things that makes it fail is when the buyers are just not there. When the buyers are not there or the sellers are not there, the patterns don't work. All right? Because when you think about it, all these patterns are doing is just buying pullbacks, right? And breakouts and pullbacks. Those are the only two types. You want to call it a continuation pattern, etc., etc., etc. Who cares? The whole point is when people buy, they buy only in two categories or sell in only two categories, breakouts and pullbacks. And for the pullback, they have all these various systems. Oh, it's it comes back and then this crosses this, or it looks like a bull flag, which is nothing more than a pullback, or it's a bull pennant, which is a different type of pullback with a higher low than the prior low, making a, whatever. So, or it's touching VWAP or whatever. It does not matter. It's just the entry mechanism, right? What matters there, the buyers there, they're interested in getting into the market, and this time of day says they are. That's when it'll be ready. All right, so now it goes up here, and you have a big wave down. So let's see, 42.64. We get 1, 2, 3, 4, 5, except for this. This wave here lasted went down 77 ticks. I don't understand. How can this go down 77? 77 stocks go down in 3 minutes. This is only 66, but there's a very nice trend change. Notice you go full red, down, up, down, full red, down, red, up, red, down, red. So that's a very, very good sign that there's been a trend change. When it takes out the low, like even over here, went down, up, down, it went slightly lower, but it didn't break and go lower, like really making that lower low. So that really helped set up the test. And you have the market confirming right here. Yeah. The only thing you have to be careful of when it does all this distribution, like this right here, this block of distribution, there is a tendency for there to be a rally up. All right. Why? I don't know. All I know is that when there's that many breaks and then it goes down, there is a tendency to go up, and here it's very revealing because they use this support level for the buying to start, like right into this support level, right? This was support right here. It's pull back and big rally. So throw it down to that level, get the buyers to create enough buying pressure for that upthrust to take out any early or you know, the shorts that are right here instead of up here. This happens. I see this a lot of times. You know, so just have to know that when you're placing the stop, because you know what happens is folks will put their stop right here above this high. Why? Because there's a high volume area that set up the break. See, this red is the biggest volume in 19 bricks. So what they're going to do is they're going to get in on a tap and put the stop right above for a low risk trade. But it doesn't work because it's up thrusted. So, you know, there is, when you're putting in the order, you just have to kind of, I don't know what to say, just, sometimes it'll hold, sometimes it won't. You have to have enough distance, okay? And you see what happens on that tap. You see how it increases in the volume. You know why? This area up thrusted this area and ran the stops. That's why it's that high. The volume here, look at this green and red. As soon as it gets there, what's going on? Right, and then you have a nice little move. 1, 2, 3, 4, 5, 6, 8, 9, 10. Perfect 10 brick move. And that's all. So this was a counter trend down. It should also be noted that when counter trends occurs, this type of behavior generally happens. Meaning counter trends, you have more springs and up thrusts in counter trends. The three characteristics you'll find. One is more springs and up thrust in counter trends. After the directional change, after the turning point, there'll be more spring and up thrust like this. Second, the move will be small. Okay, the move will be small. Because counter trends, they always have small moves. They're like pullbacks. They're not the rallies, they're the pullbacks. And third thing is their probability of success is lower. Why? Because there's too many trend buyers all in the background. I'll give you an example. Like over here, you have green, green, and that's high volume here. They're buyers here. They're looking to buy pullbacks. And so that, I mean, that's the issue with counter trends. Those are 3 issues with the counter trends. I'm not saying you can't trade them, because you definitely can trade them, but get ready for break-even trade. You're not going to be able to milk the counter trend. It's just the way it works. So I mean, over here even it's just 10 bricks. So. And you have to know the support and resistance levels. You have to know those support and resistance levels with counter trends better than with trends. With trends, you're just, okay, whatever, it's like 5 to 1 trade, whatever. With counter trends, it's not going to be a 5-to-1. It's either 2, it's usually 2-to-1. That's the other point about counter trends. And you have to know those levels where it'll be like a 2-to-1 trade. Like in this case, it just set up the trade to do a spring against this area. See that? So what is the whole purpose of this? It's just to go down to support and run the stops. That's it. And it's a wrap, folks. All right. That's it. Bye.